Great. Hello, everybody. Thank you so much for joining. I hope you can all hear me fine today. Thank you for joining. I was not here on Wednesday, so it's kind of coming back to the end of the week, so coming back after everything happened. And the way I guess I'm looking at it, because I was out a couple of days traveling with work, is that essentially it feels like we haven't moved that much. So we have obviously had some good rallies. The euro is obviously still looking fairly good, but it's still getting caught. There's still a lot of pitfalls going on. Obviously, we've seen kind of dollar yen fail to keep its upside, and we'll take a look at that now. And I'm just going to pull up a chart, so just bear with me one moment. Right, so I'm hoping that you can all hear me and that you can now see my chart. There is sound. If you can't hear it, you may need to adjust your own set. What you also need to, just double check with the FX Street admin that you can see my chart as well. It's a dollar yen, it's a 30-minute chart. Sorry, I had some problems loading my charts this morning. That's why I was a little bit delayed getting started. Great, it looks like everything is fine. So let me just pull this one down a little tiny bit. Right, now this is a 30 minutes. It's just a very short-term chart. Obviously, euro-dollar had a fantastic kind of rebound, if you like. Look at the daily just so I can show you that. So we'd kind of done, kind of looked like we were making some headway. Now I'm going to go to a very long-term chart because I just wanted to kind of show you that. This is just a monthly chart. And as you can see, it looks like we had broken a very long-term trend line, essentially. And if we go back to the monthly, it was even more, or we'd at least been testing it. And a lot of people obviously came out, were saying about how potentially that could have been, a sea change or a massive trend change in dollar yen. So that was that kind of break above around about kind of 70, like all the resistance was around the kind of 77, 60 or 50, 60 area. But that didn't actually work, even though we did try and touch this 78 level. Obviously then along came the Federal Reserve on Wednesday evening and kind of put pay to that. Now just, this is a very long-term chart, but as you can see, very much so kind of a sideways channel there. Right at the moment it's very weak within its most recent range. There is this kind of 21-day moving average which is holding a support right now. So that's a really, really key support level. And if we just go to the shorter term charts, I'll take off some of these lines because they're just annoying. Okay. So we did dip below 77 at one point today, but we have been kind of going back here. So if you think it's about that 77, not where that 21-day moving average is, that's acting as fairly good support. We have tested the water underneath it, but haven't been there for too long. So it is kind of managed to find its composure around about 77 dollar yen. However, below 77.45 thereabouts, this kind of cluster of support here. I'll just point that out for you. So below this level here, which acted as fairly good support and then resistance really ahead of this kind of huge drop that we saw on Friday. On Wednesday post the Federal Reserve meeting. That was actually here. So we've just seen kind of various levels. So basically below the 77.45 level, we'd probably look for 76.95, maybe 95 or 90 to 95, then potentially 76.65, which I just go on slightly longer term chart here. Kind of the lows from there, that's 76, 65, 70 thereabouts, and then here, get them up, yeah. So, but as you can see, that 76.95 has held fairly well today. So in the very, very short term, we think it could be a bit of dollar yen going back to its old, it's kind of, multi-month trend, which is not to do very much really. It's kind of moved sideways a little bit, to have experienced very low volatility. And we've obviously tried to test the upside, tried to burst through that, key resistance level at 78. It didn't last long, as you can see here. Since just fallen off, obviously led lower by the news from the Federal Reserve. And what we would kind of expect is just a bit of range trading now, really. As you can see right now, it's really, really tight range between kind of about 77.20 to about 76.90. So not too much going on there. Actually, probably the least kind of fun one. Obviously, it had the high today was 70. Oh, that could have been from yesterday. But we would, it is looking very, very weak within its range. So today it's had kind of quite a sharp fall off. If you just look at the 15-minute chart, it did, it was as high as kind of 77.48. Hasn't obviously managed that at all. That looks like another kind of sharp leg lower. It kind of broke through some key moving averages there as well. And right now, we kind of think that we could be a bit of a tight old range. Probably, definitely 76.90 on the downside is acting as really good support in the very, very short term. But if we can't get back above 77.45 and stay there, then potentially we may see further downward momentum towards that kind of 76.65 low that I pointed out before. Just in terms of momentum, though, as I said, 76.90 is held really, really well with dollar yen, and that's being reflected in the very, very short-term MACD indicators. But if we take a look at the 60-minute, that's starting to look a little bit oversold, so we wouldn't be surprised to see a bit of a pullback, especially today, being at Friday. It's had kind of 2 days of losses, so do expect some kind of activity. But again, as I said, if we were to close the week above 77.45, then we think that we could potentially then maybe potentially try and retarget this kind of 77.75 level. But we are kind of still very bearish. Dollar yen, obviously, as some of you may know, has a very, very close relationship with the 10-year US Treasury yield, which fell again. Obviously, it's still below 2%. It fell quite sharply after the Federal Reserve meeting. Added to that, 5-year US Treasury yields reached their lowest ever level yesterday. And I think it was 0.77%. But, really, really important level, really important, dynamic going on there. And the weaker the weaker the yield, the stronger the inflows into treasuries, that tends to weigh on dollar yen. So we believe that relationship will persist. And because we don't see US Treasury yields moving higher anytime soon, then we're kind of medium-term bearish on dollar yen. Now let's take a quick look at euro, of course. Bear with me one moment. In terms of kind of euro, as you see, this is the hourly chart. Stuck in a bit of an old range here, wouldn't you agree? It hasn't really been able to sustain itself above 131. Certainly not in the short term anyway. It came off. It had been as high as 131.80. Yesterday didn't manage to stay there and has kind of drifted back lower. Let's take a look at the shorter term chart. So here's a shorter term chart. Trading sideways most certainly in a very, very tight range this morning. Investors, I think, don't know what to do, and that's largely because of there's an awful lot of uncertainty out there. We've had some very weak Spanish unemployment data just come out now. We also have obviously we still don't have a final agreement on the Greek private sector bondholders deal, even though talks are restarting today. So really, kind of this kind of area is. This is just kind of congestion. We are still, above 130.05, above 130 really. We're still fairly kind of bullish in the kind of short to medium term. There could be a bit of consolidation, and that's really what we're seeing. It's a bit of kind of sideways trading the last kind of day or so. Take a look at the daily chart. So there you go. That's kind of, could that potentially be a bit of a double bottom there? And then we kind of bounce higher potentially. We need to see where it goes, but then, the top kind of 131.10. So 131 is becoming quite a difficult, tricky handle to rise above. However, if we do manage to kind of stay in this 130.85-ish area, which has been kind of key support, certainly in the short term at least. I do like the fact that could potentially be a bit of a double bottom there. Then we could potentially see another move higher. Now, obviously, if this range is to persist, and you know, it looks like it's held here, maybe now this is kind of a good time to get in. Potentially, if you're going to retarget that 131.50 level, then potentially that 131.85 level higher. You know, with breakout, if you think that this is kind of the euro changing its trend, you know, another leg lower for the dollar, there's obviously a lot of fundamental reasons to believe that. You don't want to get in here just in case that doesn't necessarily happen, because we're still choppy. There's still a lot of, you know, bad news associated with Europe, a lot of risk factor associated with Europe. You know, these are the kind of the ways that you need to look at kind of trading from now on. It's kind of trading ranges and getting in at the most efficient time. And if this does manage to hold, it looks like it has potentially, then, you know, getting in around this zone between here and maybe 131.10, maybe good if you believe that it could potentially get to this kind of 131.50 level and then 131.85. So if you're kind of short term, you know, essentially this is still kind of consolidation, if you like, in the euro. This is not a kind of a long-term trade idea. This is very much a short-term trade idea. That's obviously also very at risk from kind of overall risk sentiment, of course. But just on the technical side of things, potentially the fact that it's held, that this 130.85 to 90 level has held twice in the last couple of days, suggests that we could get a bit of double bottom, could reversal up to the top here. And then obviously if that's a double top, then we could be heading lower. But you know, certainly short-term consolidation is what we're looking at. And you know, this is kind of still a bit of short covering, really, even though we think that there's a lot weighing on the euro going forward. Not least, of course, the fact that the ECB is also doing QE and is actually expanding its balance sheet, something that the Fed hasn't agreed to yet. So that's kind of an interesting one. Certainly euro. Let's take a quick look at the pound. So this is just pound dollar. So the pound's looking good. Right, it's quite a nice uptrend there. You can actually go like that as well. Falls break lower below with that kind of 156-ish zone. We were looking, sorry, someone just said, and I should clarify this, when you say short term, do you mean a day or a week? When I say short term, it usually kind of means kind of a couple of days, a day to a couple, intraday to a couple of days. Certainly no more than 3, and certainly not a week. A week to me is more kind of medium term, so 1 to 2 weeks. So as you can see, it held really, really nicely. 157 in the pound could potentially be the next real kind of challenge, if you like. But if you know, this kind of 156.25, or where are we? Kind of 156. This break above here. So when we broke above here at this kind of 156.20 level, that was kind of a nice kind of bullish signal, suggesting that we had broken out of that most kind of, you know, recent bit of congestion zone all around here. And potentially we could move higher. 157. If we can break above convincingly above 157, then 157.35 and 157.70 could be the next targets that you need to look at. So, as we've said in the past, the thing is with sterling is that, you know, downside is actually fairly limited because it's not actually that strong. And I'll just point out what I mean by that. This is kind of what I mean by that. This is the daily chart over the past year or so. So it's, you know, it's fairly, you know, that's looking really nice. Certainly this 157 zone is a key resistance level. And if we can break above there, then it potentially opens the way to that kind of 158.50, certainly 158, 159. But that, you know, that's quite a big ask in this environment for the UK, especially with QE on the cards potentially next month. But we have seen in the past that QE doesn't tend to have an impact on the pound, which is very, very interesting. But we would say in the short term, we don't necessarily think that it's going to, that there's too much downside. Or maybe I should rephrase that and say that maybe downside is limited. But then again, on the upside and in the medium term, we think it could be kind of capped. around this kind of 159-ish level, 158 to 159, but it's had a really nice run. It's been a really strong performer. Let's take a quick look at euro sterling. Again, it's it's not nearly as interesting, I guess, as what Cable has done on its own. It's managed to break above that kind of 83 level again. So break above its 21-day moving average, which is its support level down here. It doesn't look too bad. Bit of a gentle meander, really, but it's not looking fantastic. We think kind of ranging. We think maybe kind of 84 between kind of 82.50 could be the way it goes. But obviously, any sign of weakness in the euro area or weakness in the euro. At these periods of time when we're at really critical levels, when we're at really critical levels in the Eurozone crisis, and there's always the risk that the UK will attract safe haven flow through gilt. I mean, that can have an upward impact on the pound, so kind of worth watching there. We are currently at kind of 83.40. If we break below this level, as you see, slight there is a kind of we are on kind of testing support at the moment. If we break below there, then 83.10 comes in as good support, and that's ahead of these kind of 82.60. What are they kind of? You would then probably look at kind of 82.70 lows, 60, 70 lows around here. They then come into view, but potentially, if we are to bounce, if we are to kind of break below this kind of 83.50 level, it could be more kind of range trading, bit of meandering, and then obviously if we don't, 84.10 would be the upside. So that's kind of the range that we're watching now. Obviously, pound looks very, very strong. The euro also does look strong. It's just whether or not it will be kind of a battle of those two. And if we just take a quick look here, bear with me one moment. Aussie obviously being one of the favourite liquidity trades out there. Obviously, when the Federal Reserve, I think, is resoundingly bullish, even though they're not necessarily going to do QE, they sound very, very dovish, which is bullish for the market. As you can see here, the Aussie's just had such a fantastic run. This is the daily chart. Let's take a quick look. Obviously, it has had a good run, getting up to really, really key support levels. Now, this is a daily chart, so these are significant levels that you need to watch out for here. It's currently at 106.30. 100 pips away from here is a major, major resistance zone, potential double top, potential triple top. But we will be watching that 107.30 to 40 level like a hawk. Let's take a look at the shorter term chart. So this is just the daily. So as you can see, looking fairly good. 21-day moving average resistance there. It looks like it's testing and breaking above there. Again, on 15 minute, after kind of trading in a bit of a range, it is trying to break out again on the very, very short term. And I'd also draw your attention to MACD, which is just pointing higher, which is another bullish signal. With Aussie, though, as I mentioned, there is that key resistance there at 107, kind of, just go back to it and double check that level. Kind of 107, you could say between kind of 107.30 to 50. And then you've also got, if we were to break above there, then we could potentially see back to these 110 highs. But, let's not jump ahead of ourselves. Let's not start to walk before we can crawl. There is obviously support as well. Support lies kind of at this level here. Well, obviously, kind of at 105 is going to be a key level to watch, and then this kind of 104.20 zone, which is a cluster of daily SMAs, and that's a really good resistance, a really good support if we see kind of a drop off in sentiment. But just on a shorter term note, very interesting price action. Stocks in Europe have opened lower. That's not stopped the Aussie from moving higher, and that's not stopped FX from moving higher. Now, I'm going to start just showing you some bond yields, just over to 1 moment. Because obviously, in this environment, I'm in this environment, obviously, the bond market is still really king. Well, that's how we like to look at it. There we go. This chart just shows you the spread between Italian 10-year bonds and German 10-year bonds. And as you can see, it's still continuing to fall. It's at its lowest level now in 2 months. So as you can see, pressure is still off the bond market, actually. So maybe stocks are just, they're just going to have a bit of a pullback, and then, follow the lead of the bond market. A bit of congestion here, around this kind of level, which suggests that, the gains or Italian bond yields are falling at a slightly slower pace than they have been, over the past couple of days. But, the one thing that, for those bears out there, the one thing that could potentially keep risk quite bid over the next day or so is the end of next month. So in a month's time, February 29th, we have the second long-term auction from the ECB. There's obviously Italian banks tapped that really, really closely. Basically, what it means is that they can borrow long-term or 3 years at 1%. Essentially, the plan, I guess the idea behind it was that some of that money would seep into the government sovereign bond market. Obviously, you're making probably a nice, juicy return there, kind of 5% plus return for the banks if they were to invest that in Italian banks. Now, if they, the fact that there's been a second auction and it's really kind of unlimited funds. If there's kind of big uptake, not only will it, number one, reduce worries about the sector or about the banking sector, but number two, it will also help with kind of overall sentiment, because again, it's just more liquidity, and markets absolutely love liquidity. Now, I just want to take a quick look. I know it's kind of getting on. Let's just take a really, really quick look at some indices and stocks today. Now I'm just going to have to cut out my chart. Great. So I just want to show you this chart here. This chart in front of me is the Euro Stoxx 500. So as you can see, really, really nice. That's the Pan-European Index. Sorry for those of you who don't know. Really, really, really nice uptrend, basically. Since certainly, let's say, since the start of the year. This is a Bloomberg chart. My other charts aren't quite working right now. However, we are in a bit of a kind of congestion zone, and we're at congestion zone at this kind of 2463 area. That's acted as really stiff resistance. It's also its 200-day moving average. So even though the rally may move higher, this resistance level is being really well respected, because above there really opens the way to 2,600. But in the shorter term, if we do manage to kind of stay above 2463, then we potentially target 2485 on the way up. However, if we get below 2425, we're currently right in the middle of that, about 2450. Then we could potentially see back to the 2400 level, and then maybe even back as far as that 2303, which is the 50-day moving average. Again, it can be quite sharp and choppy. Certainly the outlook for for banks in Europe has definitely increased. Added to that, there are signs that Germany is doing quite well, that Germany may be able to break away from the rest of Europe, and actually, produce some fairly good growth this year. So for those kind of blue chips positioned towards Germany, or can leverage off Germany, or are German themselves, that bodes quite well. So, the blue chip indices may do better. So something like the Euro Stoxx may do better than some of the regional indices, which is an interesting dynamic. So certainly in the short term, it's looking quite nice. It's still got that kind of nice bullish trend going. Even though in the medium term there is obviously a lot more kind of, there's a lot of risk factors out there that could kind of damage things. But I just wanted to show you guys that before you go. I'm happy to take a question if you have any. Okay. So it doesn't look like we have any questions right now. Thanks for everybody for joining. And anyway, yes, have a lovely weekend. I'm actually not going to be here next week. I'm out all of next week. So I'll be doing these webinars again from February the 6th. There is a question, where is the exact point of entry for I guess you mean the Euro stocks? Well, I would say that if we do fall back to 24.25, probably there, that would be kind of the point of entry. That is the kind of the resistance zone here that you can see. So 24, if we get below 24.20, then you might want to as I said, that trend line is still there. So probably somewhere around the 24.20 to 24.25 zone, because you don't obviously want to be buying at the highs. But if you're willing to have a short-term trade with the kind of the resistance at 24, get out kind of around the 24.65 zone. If you think that resistance is too much, then I'd wait for a pullback to 24.20. Otherwise, if it looks like it's high, or if it looks like it's momentum is certainly on its side, then think to get in around 24.60. Around 24.75, which will mean that it will have actually cleared that resistance level and could be up for another leg higher. So I hope that is helpful for you guys. Okay, everybody, thank you very much for joining. Good luck with your trading.